Greetings. Hello. Welcome to the Life in Transitions Experts YouTube channel, Facebook group, and podcast. I'm your host, Courtney Rollins. I am the operator and owner of Estate Pro Service here in North Carolina, where I'm really helping people make the estate planning and probate selling process easier. Challenges come up when people have to face probate, and quite often, some of those challenges are having enough money or funds to pay the debt or having an ability to navigate probate and get the funds you need, usually from the property from a sale. And that's where I come in offering quick cash sales, helping you understand what next steps are for the probate process, or helping you list it and get the most for it. And sometimes, and some of my favorite things to do is to help people actually keep the property in their family and help them secure it and avoid probate in the future. Probate is expensive. Probate is cost takes a long time, and it's public, which can have its own set of challenges. But that's not what we're here to talk about today. Today is part two of a series, having a conversation about some of the things you can do when you're selling a property, to be able to maximize more benefits. Who's interested in having cash passive income, or who's interested in having a large lump sum of money at closing while still continue to get money and have a good price locked in. If you're interested in any of those things and some of the tax benefits, that's what we're going to discuss today. How to sell your property, seller finance, owner finance, you be the bank. Here are 10 steps. Caveat, I'm not an attorney or giving legal or financial advice. I'm just sharing some of my experience that I've had in this space, and hopefully it can be helpful to you. All right. So first step is understand the seller finance process. And I did a video the other day on this, so feel free to go back and check out some of the benefits of seller finance. This is more like the steps. So just in a traditional property sale, usually there is a bank or a financial institution involved. Let's say you have a property that's worth $500,000, just to keep the numbers easy. Um, well, a lot of people aren't walking around with $500,000 in cash. So what they'll do is they'll take the contract they have with the seller and go to a financial institution like a bank and say, hey, I have this contract about to buy this property. Would you give me a loan against this hard asset, this property? So they give you a loan against the value of the property. Usually it's 75, 80% of the actual value of the property. Sometimes you can get even higher than that, depending on, a lot of factors like your credit and other spaces. You as the seller or as a buyer will come in and quite often be responsible for some type of down payment. You give the contracts and to closing attorney in North Carolina, and they go through the process of getting the title search, taking your down payment, getting the funds from the bank, and giving it to the seller. Now, for seller finance, uh, well, let's say the bank financing, it's an awesome tool to leverage, but there's a lot of underwriting. You have a lot of folks who a lot of steps that need to be taken and check boxes to check, and it can be long, it can be tedious, and it can require a lot of money. Now, seller financing, this is when the bank is removed and the seller and the buyer agree to the terms, and the attorney conducting the closing creates the note. Quite often, the attorney will or have someone who knows what they're doing, create the note or the mortgage or deed of trust or whatever name you want to call it, and creates like the terms, like, okay, you have this now, you have this loan, as the seller. I have a note that's worth $480,000, and the buyer gave me $20,000 at closing. So now they're making these payments based on what we agree with. They're called terms. How much monthly payment they're making? Is there interest involved? Was there a down payment? When is the all the money due, or when's the loan over? Those are the things that will happen for the seller. And some of the benefits, as we talked about before, is that it's a quicker process. You can have more flexible terms. You can actually sell at a higher price because you're offering premium service. It's very helpful for the buyer as well, because they come in, even though they're going to buy it eventually at a higher price, they get to come in at a lower threshold, not have to deal with the banks. Perhaps they're an entrepreneur, they're having a hard time showing their income for the past several years, which a lot of banks want to show. Perhaps they had some challenges in the past, and now they're cleaning up their credit, and now is an opportunity for them to still step into home ownership. Whether you're an investor or a buyer, I'd always recommend that you talk to the seller about owner financing, because it's truly one of those win-win situations when it's set up properly. All right. The next step is determine the terms. We talked about that. Is there a down payment? What's the down payment if so? Is there interest rate? Is it on interest only so you can protect the principal? There's really loan duration. How long? What's the monthly payment? Those are the four major terms, and you want to make sure all this is legally recorded and documented so that everyone can protect themselves. I would also recommend that when you do start servicing the note, really paying when they're making a payment, that you have a third party license note servicer so that again everything is on the up and up, everything is out in the open, and people can see what's happening there. You, the seller, the buyer, whatever role you are in that transaction. Of course, consult with professionals. That would be real estate attorneys. Are the main folks you want to have a conversation with about that because they'll be able to help you make sure there's no loopholes that don't protect you or the other person party. Of course, prepare the property if you're deciding to sell it. Now, one good thing about seller finance, just like with other properties, if the property needs to be fixed up, this may be an area where you step back and say, hey, take it as is, and here's the situation, but you still have to disclose, or you might want to fix it up so that you can hopefully squeeze out some more equity out of it. Of course, market it to all the different spaces, make sure people know, people can see it, all that great stuff. That's step five. Number six, you're attracting those potential buyers. Make sure you vet them. Yeah, I still would recommend that you do a income verification. I want to make sure that they have 3 months worth of income in savings just in case something takes place. I want to see that they have steady employment. I do a background check. All these things. There are actually some things that, depending on the state you live in, where you may have to see connect them with a residential mortgage broker because what you want in some places is let's say you have a seller finance deal and the loans for 5 years, 10 years, whatever long. During that time, the seller should be or the buyer should be preparing themselves to acquire a new loan. That means fixing up their credit, getting things that need to be during that time. So it's a great opportunity for folks to do some to prepare during the time that they have with you. Now, again, some people they have notes out for 25, 30 years and they just stay at the bank and they just enjoy that monthly income. And instead of being rental investors, they are note investors and they don't have to deal with the toilets, termites, and tenants, the three T's that come with being a landlord. Of course, draft up the seller finance agreement. Make sure it's drafted by or reviewed by a trusted consultant. Number eight, this is not necessarily you they'll have to do, but the title company will, or the closing attorney, depending on the state, will conduct the title search to make sure it's clear. Number nine, you'll close the sale and make sure, again, you keep all records and maintain records so that, and that's really what the note servicer can help you do so that during the transaction, everyone knows where everyone is. If you want to have more conversations about this, or you may be interested in selling your property on seller finance, or need support selling it, or even looking for a buyer, definitely reach out to us at Estate Pro Service LLC. And you can email me, Courtney at estateproservice.com. Check out the site. Call me 443-990-1687. All right, I'll end this like I always end it, saying this is the Life in Transitions Experts YouTube channel, Facebook group, and podcast. Let your light shine. Cheers.